Hey folks, as we know, like based on underlying asset, the mutual fund can be of three types: equity mutual fund, debt mutual fund, and a hybrid mutual fund. Under equity mutual fund also, there are 8 categories. And based on SEBI norms that named categorization and rationalization of mutual fund scheme, they mentioned that each AMC can have only one mutual fund from each category. That is from each category, they can have only one mutual fund. So that means each AMC can have only 8 mutual fund, one from each category. So I'll get back into these categories, but before that, we should know that these categories are defined based on market capitalization. What is market capitalization? It is the valuation, market valuation of that company. How to calculate that? We can calculate that by multiplying number of shares of that company into market price. So let's say there are 100 shares of that company and market price is 50. So the total valuation of that company or total market capitalization of that company will be 5,000. So I've taken a small number to make this calculation easy, but these should be in crores. So based on market capitalization, the market can be divided into 3 categories: small cap, mid cap, and large cap. So for me, information, like in Sensex, there is almost approx 5,000 companies are listed, and in Nifty, almost like 1,500 companies are listed, almost more than that. And among those companies, like 100 to 150 companies are large cap, 100 to 150 companies are mid cap, and rest all are small cap companies. So what are the features of large cap, mid cap, and small cap? So for large cap companies, they are like well-established companies. They have a significant market share. They are dominant in the industry and stable and reputed companies. But if we invest in those companies, so the risk will be less as well as reward will be less. So these are less volatile and less riskier. So these are companies like Reliance Industries, TCS, Infosys, and HDFC. Mid-cap companies are more volatile and more riskier than large cap, but they have a very good growth potential. And they can become a large cap company in long run. So these companies are like Voltas, PI Industries, Astral Polytechnic, City Union Bank, etc. So here, like, risk will be a bit high and reward will also be high. In case of small stocks, so small cap stocks, so these are like small companies which underperformed since long time, but they're like, however, the growth potential can be huge, and sometimes like few small cap stocks become outperformer. So here risk will be more and reward can be more. So when we choose a mutual fund, in that case, like in case of small cap mutual fund, we need to check the fund manager portfolio or his experience or his expertise, because like choosing a few company among 5,000 companies is a great task. Like it requires a good amount of expertise. So it is very important to check the fund manager portfolio and his expertise before choosing a small cap fund. So these are companies like Tata Elxsi, Galaxy Surfactants, and Brigade Enterprises, etc. So based on these market capitalization, equity fund are divided into 8 categories. So like large cap funds, in this case, 80% will be in large cap stocks. Mid cap, 65% will be in mid cap category stocks, and rest can be in anything like in other equity like large cap, mid cap, small cap, or debt fund also. In case of small cap funds, 65% should be in small cap. In case of multi-cap, 65% should be in equity across like large cap, mid cap, and small cap, and rest can be in debt or corporate bond or government bonds. In large cap and mid cap funds, their 35% should be in large cap and minimum 35% should be in mid cap. Focused fund, these are basically focused into some sector or uh, some companies. Like at least here should like number of companies should not be more than 30. In case of tax saving funds, so this like equity, so 80% should be in equity, rest can be in debt or corporate bonds and government bonds. Value and contra funds, so this is basically like, let's say market sentiment is in favor of IT and pharma. So in that case, if the fund manager will invest in those companies and those sector, so that is called value fund. Contra fund is totally opposite. If the market sentiment in favor of IT and pharma, the fund manager will invest in other sector like automobile, metal, or infrastructure. So if a AMC have a value fund, it cannot have contra fund and vice versa. So yeah, that's it from this video. So here, I hope you get a few knowledge about this like type of fund in equity. If you liked it, smash the like button, subscribe the channel, and hit the bell icon so that if I upload a new video, you will get a notification. Thank you. Bye.